I'm Mitch Goldberg with Client First Strategy. Listen, I'm not here to hype the market, to tell you what to do right now, what to buy, what to sell. What I'm here to do is, with the purpose of these videos, is to really break down what I think of the multitude of reasons that are driving stocks up and down constantly, is that there are usually some very deep underlying themes. I call them the real reasons behind the reasons of market movement. And what I see now in terms of dollar movement, potential for changes in interest rates, are really the two big driving themes at the moment. So let's get stuck in and we'll talk about this real quick.
For some signposts, we turn to Mitch Goldberg.
We welcome Mitchell Goldberg.
Now, today's market action is a little bit different than yesterday, okay? About a week ago, we saw major retailer stocks really get absolutely crushed. And yet today, you see some of the big retailers doing very well. So it appears that people are changing their minds, moving back and forth, and investors are trying to figure out what to do. So what I'm going to tell you is two broad themes. The first one is this. It looks like the Fed is really telegraphing much more strongly that it's getting ready to start to raise interest rates or normalize interest rates. Not necessarily a bad thing. It doesn't ruin the party, it doesn't pull the punch bowl away necessarily. But what it does is it changes the landscape. And I believe if this is going to be a long-term trend, you have to take a look at what issues are affected. If the Fed raises rates, it makes the dollar stronger typically, which hurts commodities like energy. Okay, so you see oil come back down, and it can also harm the profits of American multinational companies. So this big rally in stocks that we saw the last 2.5, 3 months can all of a sudden start to reverse itself, which is what you're seeing a little bit today. But the saving grace of the market right now has been that the financial stocks are finally showing some signs of life. Now, although financials were the best performing sector of the day yesterday, believe it or not, they're actually at the bottom performing of the 10 major sectors today. And utilities are number one today, which were the worst off yesterday. So this isn't going to be a straight line like the Fed's going to raise rates. Multinationals are going to get hit because they have exposure to overseas currencies, and they're going to show weaker profits because of dollar strength. It's not going to happen in a straight line, and it's not going to affect every country in the exact same way. But the big things, the real reason behind the confusion and why you're seeing these market gyrations as of the last week or so, that's really been accelerating. And again, the market moves haven't been overly dramatic, so I don't want to hype this to make you think that, oh, there's something more going on here than what meets the eye. But investors really have to try to figure out, where is the dollar going? Where is the Fed going? And as of now, I'm taking my cue from the market and from what major investors are looking at and what Fed policymakers are talking about is it looks like we have to really start to get ready for an earlier and gradual interest rate hike, series of hikes coming up, which will definitely impact, in my opinion, impact the dollar, which will make the euro and the yen look weaker. So it also gives us some opportunities for potential international investments as well. So that's the story, and that's what's really moving the market around today, but overall this whole week so far. I'm Mitch Goldberg. Thanks for watching. If you have any questions, please hit me with an email, leave some comments below. I want to do this basically every evening, every late afternoon, early evening. So I hope you enjoy it. And if you have any questions or if there are any topics that you want to speak about or you want me to speak about, please let me know and I'll be glad to address them. Thank you very much.